Guess the number game.
Okay, Austin, so what is the Guess the Number game today?
So to set the stage, I went through all the 2025 target date funds, and the question I have for you guys is how many assets are in those funds?
Well, let's first explain to everyone what a target date fund actually is.
Yeah, these people don't know what target date fund is.
Yeah, so target date fund is basically you're choosing the year in which you think you're going to retire. So if you think you're going to retire in 2025, you pick target date 2025.
It's like investing for dummies.
Right.
And so the problem is, as a former CFO, I remember in our 401k, we had 12 investment choices. Nobody knew what to invest in. And so people were going to their coworkers, which funds am I in? People are going to their parents, their neighbors, and it's just like this big chain. And like the most popular guy in the office, he decides that you should be in this fund. Then everyone else is in that fund because Joe from accounting is in it, so we got to be in it. And the secret is Joe from accounting knows nothing about investing. So basically the solution were these target date funds.
Right.
It's like a set it and forget it. You don't have to go ask your dad, what do I do with my 401k? You don't have to ask Joe from accounting how to invest in a 401k.
Right.
Right now, 85% of assets in 401ks in America are in these target date funds. And it's really the best way to invest because it adjusts for you as you get older.
Right.
So back to my question, how much is in these 2025 target date funds?
So there's about $200 billion.
Yep, $206 billion.
Right. $200 billion. And that is just for people in 401ks that are going to retire in the next year.
Wow.
Just $200 billion. It's a lot, right, Brooke?
Yeah, wow.
Yeah, so that's a lot of money. So we're talking about $200 billion in a target date fund for somebody who's going to retire in the next year.
So how much is at risk to the stock market in those funds?
So so the 2025 is going to be about 50% in the market.
How do you know that?
Because of our meetings and going through it with our clients that come in.
She's an expert.
Yeah, we show that to
Common
people
question.
a lot.
Yeah.
And so what happens when you have a 64-year-old couple, who walks into the office and we break down their portfolio, their perceived safe portfolio,
Yeah.
and you show them that 51% of their money is at risk in the stock market? What is their general reaction?
They're usually surprised. They didn't realize it was that much at risk.
They're like, whoa,
Yeah.
just like Brooke just said.
Yeah.
Yeah. So this is really at the crux of the issue. In episode 1, we said the industry has set us up to fail. We actually told people about the document, 5toask.com, where they can get every single question that they can ask their advisor. And in this process of asking your advisor questions, that is something that you should be going through. And when you learn that the industry in billions of dollars is actually selling it short, because that's just the 2025 fund. There's the 2030 fund. There's the 2035 fund. It goes all the way up to, I looked today, 2065 fund. You're talking about $27 trillion of retirees' assets. The majority of them are in these target date funds.
Right.
And so when it comes down to it, people are walking off the street, becoming a client of ours, walking to our office, and I'm showing them, or you're showing them, or Austin's showing them that if the stock market changes, this could be drastic for your retirement. And it just really frustrates me. So put it into perspective.
Let's take a step back and look at this. So let's say you have $1 million in your 401k.
Okay.
Let's say the market drops 20%. You lose $100,000 out of your 401k.
100 grand.
So now let's take the next step, 30% decrease in the market. How much money do you lose there?
You lose 150 grand. Now let me ask you, Miss Brandon, has the market ever dropped 30% in a year?
Yes, definitely.
Absolutely it has. Right?
Next step, say you lose 40%. That's $200,000 you've lost.
So I'm getting ready to retire. I'm putting my money in a professional fund with $206 billion other dollars of other people's money, and you're telling me that if the market drops 40%, I would lose $200,000.
You wouldn't,
Yep.
yeah.
Yeah, and that changes your retirement.
Yeah, you'd probably be delaying your retirement.
Yeah, definitely.
It changes your retirement. I just feel like it's frustrating when we show people this, they don't realize it. And that's what's wrong with target date funds. So your danger zone starts 5 years before you retire, yet these target date funds are literally exposing people, and I saw it firsthand, okay? My dad, in 2008, lost nearly half of his money because he was in a target date fund. And with millions of other Americans who, even 10 years after that, were still reeling from what went wrong in their target date funds. If you don't believe me, look at here. So these are the top 7 target date funds, 2010 target date funds, that dropped as much as 40%. And these are the funds, the target date funds, that are supposed to protect you in your 401k if you're going to retire in a year or two. They didn't. That's why I think the in-service distribution is so important. It's this IRS law that allows people to protect their 401k, and it's just as simple as that. You have to do it.
Yeah.
So the target date may not be an option, in my opinion. I strongly think it's not an option based on what I just showed you. So we'll talk about what you can do a little bit later, but the basic solution to this problem is a little thing that most people don't know. But you're able to basically take your money and get it out of that 401k and protect it. But it's important to say, with this solution, there's a price to pay. Nothing in life is free. So if you look at this screen, if you take a look at the left-hand side, that is basically the potential outcomes if you remain in your 401k in the target date fund that we talked about, the 2025 target date fund. Okay. On the right-hand side is what happens if you opt to protect your 401k. And I just want to take a step back for a second. Why would you want to protect your 401k? You're sitting at the table. You've saved up $800,000 in your 401k. Your nest egg is at a point where you're ready to retire. You're sitting down with a financial advisor or somebody. In our case, it's the AIM retirement system. You're ready to go through a lot of things. You're ready to talk about how can I get guaranteed income for the rest of my life. You're ready to talk about how can I maximize my wealth with doing a Roth conversion. You're talking about Social Security maximization. Give me one more thing. I'm putting you on the spot. Medicare. Right? I mean, it's so much. There's so much to talk about. Long-term care. This is the AIM retirement system. Okay, so back to this screen. You are not at the table anymore if you lose 20% of your money, 30% of your money, 40%. You're not even at the table. You're working for another 4 or 5 years. Okay, so the point that you're at right now is not about making more money. You are about to retire in the next 3 to 4 or 5 years. The point is not to lose it. So on the left-hand side of the screen shows you over the last 50 years what your target date fund would have done for you in a year. This is a person with $750,000 in their 401k and possible outcomes. Okay, there's 50 different outcomes. The best outcome, they made $204,000. That's awesome. The worst outcome, they lost $120,000. You're not at the table if that happens to you. The right-hand side, as I said, it comes with the cost. You're protecting your money. We'll talk about how you do that. You will make less money by taking the route of protection. This is retirement. It's not about how much money I can make. It's about how much money can I avoid losing. And the most important word or number on that chart is the no loss. Okay?
Yep, for sure.
Typical outcome, you got $750,000. You got 1 year to retire. On the left, you're probably going to make $72,000 if you stay in that 401k. Translation, you're probably going to be okay, but you may not be. On the right-hand side, typical outcome, you're only going to make $47,000. That's about, what, $25,000 difference?
Yeah.
Okay. If you are worried about the difference between of $25,000, are you ready to retire?
No.
No. Right. Your concern here is to protecting your retirement. Basically guaranteeing that you have in a year from now or 2 years from now or 3 years from now that you have a seat at the table with that advisor ready to go through a full financial plan.